Hey everyone! Welcome to the XRP market analysis for May 9th, 2026. You know what I've noticed? Today's been quite interesting for XRP, so let's dive right in and see what the data is telling us, shall we? Oh, before we start, I want to be super clear about something. This video is based on an AI-generated report, and I'm just someone looking at the data with you. So please use this as reference only, okay? Remember, investing is always your own responsibility, and I'm definitely not a financial expert here. So let's start with where we are right now. XRP is trading at $1.4195, and actually, that's pretty nice. We're up 2.19% in the last 24 hours. The trading has been quite active too. We've seen about 66.36 million XRP changing hands, with prices bouncing between a high of $1.4270 and a low of $1.3778. Here's the thing though, the AI predictions are showing something really interesting. We might see some short-term pain before some serious gains, but more on that in a bit. Now let's look at the technical stuff. The RSI is sitting at 47.13, which is pretty neutral. Not too hot, not too cold. The MACD is at 0.0017, but it's below the signal line at 0.0033. So that's suggesting some bearish momentum right now. For the Bollinger Bands, we're actually above the middle line at 1.4070, which is encouraging. But here's what caught my attention. We're still about 21.70% below that 200-day moving average at $1.7683. That's quite a gap, sweetie. Moving on to the bigger picture stuff. XRP has a positive correlation with Bitcoin at 0.2396, which makes sense. But it's got a negative correlation with the dollar index at minus 0.2110. What's interesting is that XRP seems pretty independent from traditional stocks. Very low correlations with the S&P 500 and NASDAQ. So when the stock market gets wobbly, XRP might just do its own thing. No major geopolitical drama affecting us directly right now, which is, well, that's always nice to see. Here's some good news on the regulatory front. Ripple's CEO, Brad Garlinghouse, mentioned that the Clarity Act could really unlock growth for XRP. The Senate Banking Committee is planning a markup hearing for March 14th. And get this, UBS actually disclosed holding XRP positions through ETF vehicles in their SEC filings. That's institutional money getting interested, honey. These regulatory improvements could be really important for the medium-term outlook. Now, about market sentiment. It's not great, honestly. The Fear and Greed Index is at 38, which puts us firmly in fear territory. XRP search trends are at just 23, showing pretty low interest right now. The FOMO spread is neutral at 1.0, and compared to Bitcoin, people just aren't as excited about XRP at the moment. You know what I've noticed? Sometimes the best opportunities come when everyone's being cautious. Looking at what's happening on-chain, this is a bit concerning. We're seeing 11,966 daily transactions with whale activity showing 1,605 big transactions. But here's the thing, XRP network activity has dropped 85% from 2024 peaks. Both new addresses and active supply are declining. That suggests the network isn't seeing as much real adoption as we'd like. It's mostly speculation that's faded away. From a technical pattern perspective, Elliott Wave analysis puts us in Wave C, which is a corrective phase, so we're still in that downward correction mode. The Wyckoff analysis suggests we might be in an accumulation phase though, with about 46% confidence. That could mean smart money is quietly building positions at these lower prices. Huh? It's like the market can't quite decide what it wants to do yet. Now here's where it gets really interesting. The AI predictions are showing something quite dramatic. Short term, and I mean one day, the model predicts a drop to $1.0513. That's a 26% decline with 83.2% probability. Wait, but then it gets exciting. The 7-day prediction shows $1.7738 with 80.5% upward probability. and the 30-day forecast reaches $2.1174 with 76.3% confidence. So we might see a sharp dip first, then a really strong recovery. But let's talk about the risks, because they're real. First, that 85% drop in network activity is concerning for long-term adoption. The AI is 83.2% confident about that short-term decline, that's pretty high confidence for a drop. Market interest is low, we're still far from that 200-day moving average, and fear sentiment is dominating. The MACD is also showing weakening momentum. These are things we need to keep in mind. So here's my overall take. I'd say hold and wait for better entry points. The AI is showing us this really interesting pattern, where short-term pain might lead to medium and long-term gains. Here's what I'm thinking for strategy. Primary entry around $1.05 to $1.10, which is near that AI short-term prediction. If it drops more, maybe 95 cents to $1 for a secondary entry. Stop loss? I'd set it around 85 cents. For targets, we're looking at $1.77 for the medium term and $2.12 for the longer term, based on those AI predictions. The key here is patience, sweeties. Wait for that correction to complete, then consider dollar cost averaging in. And that's it for today's analysis. The AI is painting quite an interesting picture. Potential short-term correction, followed by some serious upside. Remember though, this is just data analysis, not financial advice. If this was helpful, please subscribe and hit that like button. It really helps me out. See you next time, and happy trading.